You know what's wrong with most trading indicators? They give you signals, arrows, and lines, but they never explain why price is moving the way it is. So traders end up buying too late, selling too early, and getting stopped out in places that should have worked. That's exactly what this indicator is designed to fix. Instead of guessing entries, it shows you how the market is structured, where big players stepped in, and where price is most likely to react again. Let me show you how it works on the chart. To add this indicator, go to TradingView and open any chart you want. I'm using the 15-minute time frame here, but this works on all markets and all time frames. Click Indicators, search for Smart Money Concepts 2026, and make sure you select the one by Project Syndicate. As soon as it loads, you'll see labels like BOS and CHOCH, rectangular zones above and below price, and shaded areas across the range. Nothing here is random. Everything you see is explaining who is in control of the market. However, just trading signals like this is a recipe for disaster. You need tools that do more, like setting optimized trade targets, identifying volume, and filtering out bad signals, so you only catch the most explosive moves whilst avoiding sideways range. That's exactly what my tool does. And the best part, it's 100% free at the moment. So click the first link in the description and get free access while you still can. If you've ever felt like the market turns exactly where you get stopped out, this is why. First, look at the structure labels on the chart. You'll see BOS, which stands for break of structure. This prints when price breaks a previous high or low in the direction of the trend. You'll also see CHOCH, which stands for change of character. This is the first sign that the trend may be changing. So instead of guessing if the market is bullish or bearish, you can literally read it from the chart. If BOS keeps printing higher, the trend is bullish. If you see a CHOCH against the trend, momentum is shifting. Now look at the colored boxes on the chart. These are order blocks. An order block marks an area where large orders entered the market before a strong move happened. You'll see bullish order blocks below price and bearish order blocks above price. Price often comes back to these zones later because not all orders were filled the first time. That's why reactions happen there. And you'll notice that each order block has a strength label on it. This is important. Not all zones are equal, and this indicator tells you which ones matter more. Higher strength zones are cleaner, stronger, and more likely to hold. Lower strength zones can be ignored. Next, notice the fair value gaps on the chart. These appear as highlighted gaps between candles. A fair value gap forms when price moves very fast in one direction, leaving an imbalance behind. When price comes back to these gaps later, the market often reacts. You don't need to predict this, the indicator shows you exactly where those imbalances are. Now look at the shaded area across the chart. This is the premium and discount zone. The lower part of the range is discount. The upper part of the range is premium. This helps you with one simple rule. Smart money buys low and sells high. So when price is in discount, you look for long trades. When price is in premium, you look for short trades. This alone removes many bad trades. Before we trade, let's quickly check the settings. Double-click the indicator. Make sure market structure, order blocks, fair value gaps, premium/discount are turned on. You don't need every option. You just want a clean chart that explains structure. Now let me show you exactly how to trade this indicator. Long setup. First, look at structure. You want the market printing higher highs and higher lows, with BOS to the upside. Next, check location. Price must be in the discount zone. If it's not, you wait. Now wait for price to pull back into a bullish order block or a fair value gap inside discount. When price taps the zone, don't enter yet. Drop to a lower time frame. You're looking for a CHOCH to the upside. When you see that CHOCH and the candle closes, that's your long entry. Your stop loss goes below the order block or gap. Your target is previous highs, liquidity above the range, or the next bearish order block. You're not buying dips. You're waiting for structure to confirm the dip is finished. Short setup. Now flip the logic. You want lower highs and lower lows, with BOS printing down. Price must be in the premium zone. Wait for price to pull back into a bearish order block or fair value gap inside premium. Once price taps the zone, drop to a lower time frame. Wait for a CHOCH to the downside. When that candle closes, enter the short. Stop loss goes above the zone. Targets are equal lows, previous lows, or the next bullish order block. Just before we get into the best settings, don't forget to claim 100% free access to our AI indicators that catch the best moves across every market and time frame. Get instant access using the link in the description below before it's too late. Finally, let's tune this for different markets. For Forex, structure is very clean. Trade during London and New York sessions. Stick to higher strength zones only. For crypto, moves are faster. Always wait for confirmation. Never enter without CHOCH. For stocks, moves take longer. Use higher timeframes for structure and lower ones for entries. For gold, structure shifts quickly. Wait for clean breaks and strong confirmation. Keep stops tight. This indicator doesn't give you signals. It gives you context. It shows you trend, structure, location, and confirmation all on the chart. Once you understand that, you stop guessing and start reacting. Thanks for watching. I'll see you in the next one.